If you want to start taking trades like this, you need to understand the higher time frames, build a bias, build a narrative, understand if we have moved from internal to external, or if we've moved from external and now trading back into internal, if we're bullish, bearish, etc. Then once you've identified a clear bias, this is when you can drop down to your intermediate timeframes and then your lower timeframes and look for your entry models that I'm going to teach you. So this really is the easy work. The hard work and where you should be spending most of your time is on the higher timeframes to, like I say, build that bias. Before we get into it, make sure that you're following my Instagram, okay? And leave a like, comment, subscribe, and then I'll start releasing these videos 2 times, maybe 3 times per week. So let's get into the higher time frames and exactly how I trade. So starting off on the weekly time frame, this is $CAD. Now, what we can see from price is we've recently taken out this high here. So we've got a bullish push to the upside, higher, and a low down here. If we mark out from the low to the high to find out where the premium and discount levels are, we can see anything above this line is a premium, anything below this line is a discount. So we've got a key level. So this would be our internal range liquidity inside of a discount. So you can see price is all the way up here. We've pushed down. So what we can do is trade this down lower into potentially a discount and into this level here. And then, from there, we could then potentially see price continue to the upside into a new higher. So we would have internal to external. So price has taken external from this high and this high up here. So what's the likely scenario now? For price to find a discount and then trade into that internal range liquidity. And we can see we've got a level here. If I go to the monthly time frame, zoom it in, we can also see we've got this key level that price traded into previously. So we had expansion down, exhaustion back into this key level, FVG. We had a CRT, candle 1, 2, and 3, push down into the external low, which is here. We've now revisited this area. We've taken this high out here, and this is still valid for a key level, and I would refine it to this area here. So we've traded in and we've had these 2 months of bullish price action, no CRT here, but price can trade down to the 50% level of this bullish candle or into a weekly time frame discount, as I outlined, into a level of internal and then continue higher into that prior month high. Back to the weekly, we've also got this FVG here that you can see. So we've got a bullish FVG inside a premium, and we can see price has closed below it here. So we've closed below that level. So that's signaling this level hasn't held and price may want to trade lower into a discount before it either continues or we just trade lower from there. So we've understood what the weekly time frame is, where we are. We've come from external and now price is likely trading to internal. So we're building that bias. So if I play price on a little bit on the weekly time frame, but I'm going to play it day by day so you can see how the weekly candles form. So we get Monday open, we trade up, okay, and then we close. This is when I would go to a daily time frame, because you got to think what that would look like on a daily time frame. It would be an expansion down, and price is likely finding a level of internal liquidity in this candle. So we can go to the daily to look for that. So daily time frame, we've got this key level that we can look at. So I'll just delete that off. We've got an FVG, candle 1, 2, and 3, middle candle being that distribution candle. So this is our level of interest. Price trades into it, and then referring back to the weekly time frame, we have a potential for a CRT, which you can see. So I'll mark that on. Go back to the daily time frame. So it would be at this level here. So we've got the prior week. So we've got Monday, Tuesday, Wednesday, Thursday, Friday. We trade up. Monday trades above the prior week candle high. We've got the internal liquidity on the daily time frame. So we've pushed up. expanded down, exhaustion back into that internal liquidity, potential for a CRT, and we've got the CRT weekly candle low here. So the red lines are the weekly candle prior, high and low. So bringing it on, that was Monday. This is Tuesday, so we've got a daily CRT as well. Wednesday, we distribute. So Monday can act as the range or the mitigation, Tuesday can act as the manipulation, and Wednesday and Thursday are normally the distribution days. So all we've got is price trade into internal, and then we are trading to external. And then you can see Thursday gives us a continuation of that into the external liquidity. Before I get into the 4-hour time frame, I'm going to show you on the weekly what that would look like. So this is the weekly candles. So we've got that, what I was saying about, if we've got a weekly bearish candle, we might not see a key level on that time frame. So we can drop down to a daily to look for that, because we might have a key level inside of this candle. So you can see this is what I've just shown you. So we had weekly candle here, the following candle, weekly candle, trades up, finds a level of internal, gives that accumulation, and then we manipulate, fake move, and then we distribute to the opposing side of that CRT candle, which is down here. So this is simply all we're trading, and this is the candle we want to be trading. We want to be looking for daily key levels, 4-hour key levels, candle ranges. Once we have all that, we've got everything we need. We've got context, we've got the higher time frame bias. Price on the weekly was coming from external, and it was trading back into a discount potentially and into that internal. Okay, and then that is literally what we're doing. So if I go into the 4-hour time frame, so on the 4-hour time frame now, we've got the weekly, so the prior week candle high and the prior week candle low. So this is Monday's low and this is Friday's high. The following week, we trade up above that prior weekly candle high, and then we start to descend and distribute to the opposing side of that candle range. So if we're going to have a bearish week, price goes up before going down. Okay, this is the daily time frame key level, and just to show you how precise the markets are, we can refine this level as well. So when you're refining your key levels, you want to look to see where that volume kicks in, and we can see it's predominantly here. So we can refine our key level to there. You don't need to, you can if you want, and you can see price trades in perfectly, and then we start to trade to the downside. We get the daily CRT here, and then on Tuesday we get a 2-6-10, so we get our candle range where we trade above the 2 a.m. candle. That is our raid on buy side liquidity before we trade down and start to then not distribute straight away, but then we distribute on the 2 p.m. candle. We come back in to mitigate a lower time frame, order block, FVG, whatever it is, and then we start to push down again. The following trading day, we get another CRT. This time it's the 6 a.m. candle. So we get a trade above the 6 a.m. candle. We know where that draw on liquidity is. So if we get this candle range form at a key time, we can execute on the 15-minute entry model 1 that I teach. And then you can see we distribute. The following day, because we have a large candle here, and we're very close to taking that level of liquidity out. So price doesn't need to trade all the way back up here. What I would simply do is mark out from the FVG and find out where that EQ level is. So the halfway point. So the 50% level basically. And you can see it's here. We trade up. We don't actually get a valid CRT confirmation because this candle closes above, but then we get a candle range here. So again, price trades up, takes out a higher before it distributes lower. So it happens on every time frame. What I'm going to do is get into this trade here, talk to you about the 15-minute, what we look for. If you haven't already watched my 15-minute entry model, it's on my channel. I think it's the second most recent video. Go and watch that if you want more in-depth detail about the 15-minute entry model that I use every day. But let's get into this trade. right here. So this is that exact trade. I'm going to delete it all off. Okay, so we've got that key level that I outlined, which you can refine on that 4-hour time frame if needed. We trade in. The 15-minute displaces lower, breaking that important low. We then get a push down. We take that low out. We then we manipulate this high here. This is all during Asia session, so we're not trading yet. I trade from 7 till 10, but most of my trades come at 8 a.m. to 8 till 9, I would say. So we're looking here. London session open. We've got the 2 a.m. candle range, which would be from here. So let me just double check that. So we've got the 2 a.m. candle high and the 2 a.m. candle low, which is down here. And let me just actually put on the line so you can see. So we take out the 2 a.m. candle. So this is the candle that takes it out. This candle becomes our focus. So we want to see what happens after this candle. So this could be our potential valid order block. And we've got an order block here that price does come back into. And then we trade low. So we've also got an entry model 3 that I teach, which is basically an inverse FVG. So we've got a bullish FVG here. We close below it here. So we've fouled it. So we've inverted. So we're expecting price to then retap and retest back into it and then trade lower. But the model 1 entry, as I mentioned, this candle, so we can take the low of that candle and you can see the candles that follow this candle fail to trade higher. We trade lower. We close below that model 1 entry. We trade back into this inverse FVG. So you can either set your entry at the model 1, which is this candle here, or you can look at the 50% level for the inverse FVG with your stop loss above the high. You could put it above this high, but this should be a protected high if the trade is going to play out. And then from there, you simply target your 1 to 3, or you can partial, meaning, take 50% off your position and let the rest run to that, for example, 50% of the weekly CRT candle, or you can hold it all the way if you want to. And you can see when this occurs. So we get the model 1 entry occur at 6 a.m, but you can see how 8 a.m. is when we tap in, we get a bit of volatility, we fully respect this level, and then we trade lower. And the 15-minute, you can see how price was delivered into the key level bullish, meaning higher highs, higher lows. We then flip lower lows, lower highs, all the way down. And this has all started from understanding the higher time frames. So going back to the 4-hour and just zoom it in, we can see we've got that key level, we've got a daily CRT, and we've got a candle range. So we're finding context on the 4-hour, which is the intermediate time frame. Looking for context, alignment, everything's aligning to the downside. And it's all started from the weekly, the monthly, etc. And then we filter it down, we find alignment, look for the daily, any key levels, CRT, 4-hour for our candle ranges. And you can see we've got that here. So accumulation, manipulation, distribution, and we start to trade lower. Daily, I'll bring it on. So back to the daily time frame. This is that weekly key level, and this is the equilibrium, this dotted line here. So you can see we traded back into that daily key level, which is the internal liquidity, which we refined. That key level we refined on the 4-hour. We had the weekly CRT play out, so we trade above the high and we trade to the low. Completed CRT, daily completed CRT, we trade above, close back inside. So we've got a clear bias going into Wednesday and Thursday. What can we then expect to happen next? Well, if you look at price, what do we have? We have another key level, which is the daily time frame. Where has price come from? Internal. What has it just taken out? External. So what's likely going to happen next? Either we trade a bit lower, or we then now start to retrace into internal. So taking it on day by day, you can see we start to, let me just go to the daily. Okay, so we trade into internal and then we displace lower. So a few things to note here. We've got the key level here, but you might look at that and think there's no CRT. But the candle that trades down, okay, The following candle after that, we get an inside candle, and then we get an inside candle inside that one. So the CRT to be taken here is this candle here, okay? And you can see we trade up. This candle trades into the key level. We've traded above the daily time frame CRT high. So we've got a nice bias and a good target again for price to trade to the CRT low, which is also the external liquidity. Where's price come from? Internal. Where's price likely going to go to next? External, down here. And then you can see the next day, I do believe we take it out, and then on Friday we explode through it. So you can see where price is going. It's going to certain areas in the market. It's giving us clues and hints. We get CRT all the way down, candle ranges. So that's what you want to be looking for here. So once price trades above of this CRT candle into internal liquidity, you want to wait for either your daily CRT and then go to a 4 hour to look for, again, your candle ranges, just like we did on this trade here. And then we explode through. So all we've simply had, we know that the weekly is overbought. We trade into a key level. We get a weekly CRT. We trade it into that internal. We expand lower. We retrace into internal. We expand lower into external. Price is trading into a discount before it either wants to continue higher or trade even lower. And then if I go to the 4 hour, then you can see on the 4 hour, we've got exactly the same thing. Price comes back into these levels of interest. And again, if we was to refine this 4 hour key level, so that was a daily time frame FEG. I've refined it on the 4 hour. You can see how we come back perfectly. What do we get here? What do we get here? So we get, again, as we had here, all the way down, CRT candle range 2, 6, 10. So accumulation, we've expanded lower. We've retraced into a key level. We've got candle range, accumulation, manipulation, and then we distribute heavy. What do we have here? Exact same thing, exactly the same thing. So we have a key level. And if we're marking from the low to the high to find out where the premium and discount levels are on the 4 hour, you can see how, again, price comes back into a premium, into this FEG, before it then, yes, we do take out, okay, so we actually trade exactly to this low. Before we take it out, we retrace back into a premium, into that internal, and then we expand and blow through it here. The reason price does this, where it might come to a level of liquidity but not take it out, is simply to generate liquidity. It gets people thinking we aren't going to take it out, but all we're doing is generating liquidity, trading to a certain level, key level, and then we explode through it, as you can see. Back to the daily time frame quickly, you can see that price, this is where price currently is. So what's likely, the next scenario for price? Yes, we could just sort of trade down from here because we have potentially got this CRT here, but we do also have another level of internal that price could trade into. So we could push up, get another CRT, just like we've done here and here and here on a lower time frame. And then we can expand down into this weekly key level, into a weekly discount. And yeah, hopefully you found this insightful. If you did, subscribe, leave a like, comment, follow my Instagram. And if you want one-to-one sessions, if you want to work with me one-on-one, let me know and I will catch you in the next video.